Today we're looking at trade setups on the US dollar Mexican peso forex pair and the E-mini NASDAQ index futures. Stay right where you are. Hi, this is Tim from TradingStrategyGuides.com. Today we're looking at trading ranges on both the US dollar Mexican peso forex pair and the E-mini NASDAQ futures NQ1. We're going to take a look at those, but first we've got quite a few charts to check out this week. And after all that, Tim's Trading Maxim. Happy Monday. Let's kick this week off the right way. The Euro Pound hit our first target right here. On Thursday, I closed half for profit and moved the stop to break even on the remainder. We got half off Palladium at our first target right here, and then it pushed right back up and stopped us out break even on the second half. Nice little profit, 0.67%, and I'm done with Palladium for now. The pound Swissy hit our first target. On Thursday, I closed half for profit, moved the stop to break even on the remainder. Amazon triggered a full-size buy right here on Tuesday, then closed back inside the triangle on Wednesday. So I shut this down at 33.12.53 for a 1.1% account loss. You win a few, you lose a few. It's all part of the job. Done with Amazon for now. Litecoin triggered a buy on Tuesday right here. I bought it at 142.05. Hit the first target of 157.11 on Thursday, and I closed half for profit. Moved the stop to break even, and then later on in the day came down here and hit our stop loss. So we got 0.67% account gain on this, and I'm done with Litecoin for right now. Now I'm going to keep an eye on this because this is looking a bit like a trading range right here, so I'll let you know about it. Silver triggered this buy right here on Monday with this huge wick up here. That's kind of a warning sign, and I didn't heed it. So Tuesday, it dropped right back down here and stopped us out for a full 2% account loss. Yep, it happens sometimes. Done with silver for now. As I mentioned when I analyzed Bitcoin a couple of weeks ago, this descending triangle, it held right here for a couple of times, and now it's pushing on up. So this descending triangle, we're switching it, as I mentioned, to the range. So we're looking for a close above 42,000 to buy or a close below 30,000 to sell. And lastly, this is the S&P 500 setup dating back to late November. This keeps breaching the top of the bear flag right here. So I'm calling this pattern blown, because I can't justify this pattern anymore. So I'm done with the S&P 500 for right now. I'll keep an eye on it, see if anything new crops up. And that's it for the active trades for today. Let's take a look at today's trade picks. Today we're looking at a trading range on the US dollar Mexican peso currency pair. Just to be sure everyone's with us on this, a trading range is a consolidation with a strong support level like this one at 19,600 and a strong resistance level like this one up at 20,6636. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other, and I'll take a break of a trading range in either direction. And as nice confirmation of the consolidation, there's a decline in the volume and the volatility right down here. Volatility, of course, is the amount of daily movement of the price measured with the average true range, or ATR. I also want to point out that this little hiccup right here doesn't matter. It was declining. It continued the decline after that little hiccup. These things happen sometimes. As I've mentioned, the patterns do not need to be perfect. And here's our trade plan. We'll buy a daily candle close above the range or above 20.6636, or we'll sell a daily candle close below the range or below 19,600. Your stop loss is 1.5 times the ATR. Your first target is 1 times the ATR. Now let's say this thing breaks to the downside, just for grins and giggles. On the breaking candle, when you're ready to set up your sell order, look down here at the ATR, multiply that by 1.5, measure that distance above the entry for your stop loss, measure 1 ATR below the entry for your first target. Of course, it's just the opposite if it breaks to the upside. If after entering the trade, you get a candle close back inside the range, we'll take the loss right then and not wait for it to hit the stop loss. A breakout of the pattern should be explosive, hit our target fairly quickly. If not, and the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, close half the position for profit, set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. I will only risk about 2% of my account on each trade. That is today's setup on the US dollar Mexican peso currency pair. Let's take a look at the NASDAQ. Next, we have a trading range on the E-mini NASDAQ futures. This pattern is just like the one I mentioned before on the USD Mexican. The difference is the trading range, of course, has support at 12,735 and resistance at 13,608. And as before, we have a decline in the volume and the volatility. And here's the trade plan. We're going to buy a daily candle close above the range or above 13,608, or we'll sell a daily candle close below the range or below 12,735. I'm not going to bore you with that whole spiel again. The management details are always the same. If there's at least average volume, enter a full-size position. If there's only 75% of the average volume, enter a half-size position. Otherwise, stand aside. Stop loss is 1.5 times the ATR. The first target is 1 times the ATR. If you get a candle close back in the range after you enter the position, close the position and take the loss. Get half off for profit when you hit first target. Move the stop to break even on the remainder. 2% risk on this trade. And that is today's setup on the E-mini NASDAQ futures. Okay guys, this is how I manage these trades. You do you, okay? Make sure you understand what you're comfortable with and you trade it that way. And to help me keep a handle on the psychological side of trading, I use the trading maxims. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. You guys know the deal. Use whatever tools help you maintain discipline, because discipline and consistency in everything are paramount. And today, Tim's trading maxim number 40. A loss is not a loss, it's a business expense. Okay, I'll grant you that this is a little bit of mental gymnastics. Trading losses are inevitable, and if you trade, you're going to have some losses. Get used to that. If you're having trouble with that, try thinking about the losses as the cost of doing business. That'll make it a little bit easier to stomach your loss. Remember the US dollar Mexican peso forex pair trade plan today. We're going to buy a daily candle close above the range or above 20.6636, or we'll sell a daily candle close below the range or below 19,600. In our E-mini NASDAQ futures trade plan for today, we're going to buy a daily candle close above the range or above 13,608, or we'll sell a daily candle close below the range or below 12,735. For both trades, take a full-size position if you've got average volume or better, half-size if you've got 75% average volume or better. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And don't forget to sign up for my Trading Picks email list to get early notification of these picks. The link is in the description box below. And that is all for today's video. Come back Wednesday for the next installment of the Trading Education series. This time we're going to talk about moving averages. Be here Friday for my strategy of the week and next Monday for my trade picks. My videos come out at 3 p.m. New York time. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, click the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. You guys have a great week, and I'll see you Wednesday.